Today's Talk About It Tuesday question is, how do you calculate the amount needed to be invested in dividend stocks to get 5K a month in dividend income? Wow. So that's very ambitious, I have to say that, but I'm going to tell you how it can be done. So let's start off with what a dividend is. So there are companies who will share a portion of the profits with its shareholders in the form of dividends, meaning that they will pay cash or in some cases additional stocks to the shareholders. Every company does not pay dividends, only certain companies do. So you have to be careful if you're an investor. If you're looking for dividend paying stocks, you have to make sure to buy companies that do pay dividends. So dividends are not paid monthly. So the question I asked, how do you make 5K a month? Dividends are usually distributed quarterly. So how do we know how much a company is paying? So we want to look at what we call the dividend yield. Now the dividend yield is listed, there's a formula, but it is listed on any fund screener that you would look at to analyze stocks. So you don't have to worry about the formula. What we're looking for is a dividend yield of around 4%. Now, will you find dividend yields higher? Yes, dividend yields can go up 10, 11, 12. You'll see a lot of utility companies, 10, 11, 12. You'll see some tech companies even give dividends, which is rare. Tech like Apple, maybe 1 or 2%. What we're looking for is an annual average of about 4%. So what does that look like? How do you understand that? We can look at dividend yield as the percentage of the stock price annually, right? So how much do they distribute annually? They look at it on an annual basis. What percentage of the stock price are they distributing? So if we do simple math, again, there's a formula for that. Forget the formula for that. But we're looking at, let's say we look at 4% because that's pretty safe. So if we're looking at this 5K a month, let's look at it annually because again, dividend yield, we talk about annually. So if we look at it annually, 5K a month is 60,000 a year. That's 5,000 times 12. That's 60,000 a year. That is our target number, right? So the question is saying, how do we get 60,000 a year? So all we have to do is divide the dividend yield by our target number. So if we divide 60,000, which is our target number, by the dividend yield, which is 4%, 60K divided by 0.04, that will give us the number that we have to have invested in order to get 60K a month. So if you've done the math yourself, I'll give you a second to do the math. 60K divided by 0.04, what does that give you? $1.5 million. So if you have a dividend yield, average dividend yield of 4%, and again, we want to be diversified. We're not looking for one company that gives us 4%. We're looking for diversification, and the average of all of those companies that we're diversified into gives us 4%. So you might have one at 5.2%, one at 3%, one at 4%, right? They're not all necessarily got to be 4%, but the average 4%. We still need $1.5 million invested in dividend paying stocks to get us 60,000 a year, which would be the 5K a month. So is it possible? Absolutely. If you have $1.5 million invested and you're getting in a dividend yield average of 4%, you absolutely can do it. But it's ambitious. You know, let's be real. That's very ambitious that you have that kind of money invested in the stock market. But you can absolutely get there. You can absolutely do it. It is 100% doable, but that's the simple formula. So if you just do the math, again, whatever target number, so if you brought that down, right, say in half, right, 30,000, divide that by 0.04, and that'll give you the amount, which is 750,000 that you'd have to have invested. So you can look at whatever your target number is, divide it by whatever the dividend, good dividend yield, which again is 4%. But you can look at the dividend yield you're getting and it'll tell you how much you have to have invested. So if you're already invested and you look at your portfolio and it's only paying 2% dividend yield, then whatever your target number is, divided by 2%, and then that's how much more you need to start investing in order to get your target number. So it's pretty basic, pretty simple. Dividend income usually is supplementals, not usually something you can live off of, but it's a good source of income. Since the money's sitting there anyway, you might as well not only gain equity in your stocks, but you might as well get some money, paid to you also. But very difficult to, again, live on unless you have a lot invested, but great supplemental income. So I'd love to hear how you've been working the strategy of dividend investing, but please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.